Wish you could become a morning person? You know the type, up before the sun, early morning runs, first one to the office with donuts and a smile. How do they do it? Easy. With the new Galaxy Watch 8, sleep tracking and personalized insights from Samsung Health help you improve so you can wake up to a whole new you. One who, dare I say it, skips the snooze? It's possible. Train your sleep with Galaxy Watch 8. Learn more at Samsung.com. Requires compatible Samsung Galaxy phone, Samsung Health app, and Samsung account.
This episode is brought to you by Nespresso and Samra Origins by the Weekend Coffee Collection.
Introducing Samra Origins. My collaboration with Nespresso is a connection to my roots, to my mother, Samra. Coffee that hits the right notes. It transports you. Crafted with unique notes and bold, soaring flavors. Experience a taste that moves you. Nespresso and Samra Origins.
Discover more at Nespresso.com.
Welcome back to FinTech Insider by 11FS. I'm Benjamin Ensor, and today we're exploring how modern systems are a prerequisite for serving customers in a digital-first world. It's not so much a battle between traditional banks and digital banks. The real question is, who's best equipped to meet rising customer expectations, navigate regulatory complexity, and scale with speed and resilience? Are any of the established banking giants catching up or even pulling ahead by investing in modernizing their core systems? Or are digital banks still setting the pace with agility and innovation? Because success in digital requires far more than just technology. It's about building trust, about having the infrastructure, and about who can deliver secure, trusted, fast, and scalable services to customers in real time. This episode is brought to you in partnership with Enfuce, a firm that knows a thing or two about innovation. Enfuce is a next-generation issuer processor that powers card programs and payments infrastructure for both banks and fintechs. Enfuce's mission is to enable modernization without forcing financial institutions to break what already works. So they're the perfect people to be having this conversation with. So let's get started. I'm delighted to be joined by today's expert panel to dig into the strategies, challenges, and innovations required to deliver the future of banking. So first of all, we have a FinTech Insider debut for Denise Johansson, co-founder and chief executive of Enfuce. It's absolutely great to have you on the podcast, Denise. Your role is probably fairly clear from your title, but can you tell us a little bit more about Enfuce, please?
Yes, lovely to be here, and I'm excited about the conversation we are going to have here today. We are, as you already mentioned, an issuer processor. So we are enabling the ecosystem with digital-first experiences. And what I've seen again and again is that modernization in banking is rarely about technology first. It's about mindset. The systems are important, of course, but the real barriers are cultural. Fear of change, siloed structures, and the belief that transformation has to be massive and painful, and therefore something to fear. But I also see many successful transformations, and I hope we get to share some of those here today.
Fantastic. Welcome. Next up, we have Andy Sturrock, who is Chief Technology Officer of Atom Bank. Thank you so much for joining us as well. Again, your role is probably relatively obvious from your title, but can you tell our listeners who don't know Atom Bank a little bit about Atom Bank and a bit about what you do there, please?
Yeah, so Atom Bank, we were one of the first kind of neobanks. I think back in about 2016 was when we got our banking license. So we do a range of savings accounts. We do residential mortgages, and we do business lending, so commercial mortgages. I've been at Atom for about 3.5 years now. Before that, most of my career, I was a software engineer, accidentally ended up being a manager at various investment banks, and then I worked at a large oil and gas company that you can see if you look on my LinkedIn. And then, about 3.5 years ago, moved to Atom.
Wonderful. Thank you for joining us. And finally, I'm delighted to welcome back Richard Davies, Chief Executive of Allica Bank. Welcome back to the show. Again, some of our listeners will have come across you before, some of them will know Allica Bank, but perhaps for those who haven't come across you or Allica Bank before, perhaps you can just give us a quick overview of what Allica Bank is and what it does.
Sure. Great to be back. So, Allica is very much dedicated to what we call established SMEs, typically 5 to 250 employees. We've built out a full stack set of services covering current accounts, cards, all types of lending, etc. for that client base. With deep passion for it. It's about a third of the UK economy and jobs. Been going pretty well. We're the fastest growing company in the UK according to the FT this year. But lots more to go from here. I guess relevant to this conversation, before this, I was the COO of Revolut. Was involved in setting up Oak North back at the start of that, but I've also worked in places like HSBC and TSB, so seen some of the legacy.
Which is a pretty impressive CV, but not as impressive as leading the fastest growing company in the UK, which is a tremendous achievement by you and all of your team. So congratulations. Fantastic. Okay, well, let's unpack the current state of play between sort of established banks and digital banks. Let's explore some of the challenges they face to scale sustainably and meet changing customer expectations. And also think about how modern enablers like Enfuce can help banks and fintechs alike move faster, stay compliant, and unlock new growth without ripping everything out and starting over. So, Andy, it might make sense to come to you first as a chief technology officer. What's the problem with older systems, right? I mean, there's many banks and obviously insurance companies, investment firms and so on that have been operating successfully or fairly successfully using older systems for decades. Why modernize? And I realize I sound like a Luddite in saying that, but just to cover it off, what's the problem with older systems?
I think it's worth pointing out that there's actually quite a lot of good about older systems. They're very well tested and they tend to be, pretty stable because by definition, they've been around for quite a long time and a lot of the wrinkles have been ironed out. That said, there's a number of things that do start becoming problems. Again, I've worked in, Bank of America and all sorts of really large companies. And, in some of those roles, I've run the technology that is mainframe based, it's COBOL based, and getting to the point we couldn't hire anyone. The engineers were all retiring. And just actually continuing to operate the thing was some of those really big legacy systems like that is just not sustainable. You just can't get the people as much as it is about the technology. Sometimes actually the technology gets out of date and you hear apocryphal stories from all sorts of different organizations about so and so bit of technology that this thing's been running on for 20 years is now not supported, and they go and buy all the spares in the country up from eBay. And I don't think they're necessarily just apocryphal actually in cases. So there's definitely just some, this is going to die actually anyway, and you need to do something about it. I think on the sort of positive side of the ledger, when it comes to modern systems and modern ways of working and what's changed to be good technology, engineering, architecture practice, you do get some real good benefits in terms of being able to get changes out to your customers or potentially colleagues if they're colleague-facing changes just quicker than you can with some of those older technologies. So just the ability to spin up a new test environment and test your changes kind of on demand rather than having to wait for one of the existing testing environments to become vacant so you can push changes through. There's definitely some advantages when it comes to speed of execution. I think there's also some advantages it's done. You do things like operational resilience in a different way in kind of modern technology. I think, I talked about how stable some of those old systems are because they've been around for a long time. And, mainframes, I think there used to be some demo where IBM would literally fire a bullet through a mainframe and it would carry on working. It was literally bulletproof technology. You kind of do things in a different way in cloud, horizontal scaling and resilience and so on. So there's resilience advantages as well. And then finally, I think there's some cost advantages. So, you've got that mainframe. It's a big capital investment, and then it sits around. You have to operate it forever. But with things like cloud, you can do ephemeral environments, and you pay for it when you use it, and you don't pay for it when you not use it. So, pros and cons. Obviously, Atom, we're pretty modern. So, we've got all the advantages of the modern side of the ledger without actually, thankfully, having the the downsides of the other side of the ledger.
Thank you. Richard, I always think for senior executives, it must be, particularly in sort of established organizations, it must be tempting to sort of kick modernization down the road and defer the costs to next year or the year after, because it's kind of better for short-term shareholder returns. You make a bit more profit if you don't spend the money now. But what's the urgency to modernize? I mean, sort of building on some of the points that Andy was talking about. I mean, how long can you leave things in an established organization before you actually kind of have to tackle it?
I mean, so I've a fairly strong view on this, that the incumbent traditional banks only invest significantly in their stack, and often it's the top of the stack, not deep in the stack, when they are sort of forced to by competition. So if you look at, retail mobile apps, retail payments, with the likes of Revolut, Monzo, others, there's been a massive step change there over the last 10 years. And I'm literally billions of pounds from each of the major banks in the UK to improve their apps. And listen, they're fairly decent now, right, for a bank mobile app in general. There's no way that would have happened without the sort of likes of Revolut and Starling and Monzo getting to kind of 10, 20% market share in the market. And frankly, it's one of the things we always talk about in Allica is we're about 5% penetration right now. Can we get to 10%? Can we get to 15%? And through that, kind of force change in our segment that is deeply underinvested in by the major banks.
Denise, I'd love to bring you in here. What do you think is stopping many older firms from modernizing?
Yeah, I think Andy touched upon it in his earlier answer that when everything is working well and you don't see anything burning around you, why put time, effort, and money into that right now? So it's often not being honest around the table of where are we. So who is taking care of the infrastructure today? How long will they remain in the company? Are they retiring soon? Do we have available tech pool that can take over? How many actually know the business processes operated in these all systems today? Do any of the younger employees know about those processes? So it's maybe not digging into the facts, not being honest around the executive tables of where are we? Do we understand how things are operated today and where we should start? And then it might be that some are already a bit too late. So they actually don't have the needed competence internally anymore. So they just know that everything is so embedded into each other. So how do you start tackling one business processes? Then it becomes this massive thing that you have to modernize everything at once because you don't know what will break if you start moving things around. So to executives, I would only say that be honest around the table. Make sure you understand how things are operated. And if you don't understand the tech language well enough, then ask the questions until you do. Because I think it's in today's modern world, We all need to understand tech. We can't be executives servicing the financial industry without understanding how the services are being brought to our customers. And once you understand that, don't wait until things are burning around you. Because yes, you are probably facing years of transformation ahead. So if you only look at this quarter or what you can do within this year, fiscal year, you might get depressed. But you have to start somewhere. And once you get started and familiarize yourself and set a plan that you believe in together with your talented team, then things will improve over time. And in 2, 3, 5 years, you will have the modern platform that can make you compete with the more neo banks and neo providers around you.
Can I come on that? Because I think there's a really good point there you make about executives in banks needing to care about and know about technology. And I guess particularly the know about point. And I've not worked in incumbent banks for 6+ years now, but certainly my experience when I was there was that the only person around the table at an exco was the new thing about technology was the sort of CIO role. And sometimes the CIO role sat under the COO and wasn't even around the table. And the rest of the execs didn't really feel it was their job or something that they had to know about. And I totally agree with you, Denise, that it's just essential. And I think without that sort of from the top leadership of caring about and knowing about tech, it's very hard to lead a transformation.
Yeah, you can't really become a 21st century bank, if your leaders don't understand technology and are not living and breathing technology every day. Andy, I'd love to bring you back in. I mean, you and Richard are both part of digital banks. You're both building digital banks. What are some of the advantages, maybe one or two of the really big advantages you see from having a more modern technology stack? What are a couple of the crucial things that you can do that you wouldn't be able to do at other firms with older systems that maybe you've worked for in the past or maybe not worked for in the past? What are some of the things, because we see digital banks in this country and all around the world gaining market share, winning younger customers, winning younger businesses. But what do you see as kind of the big advantages you get from having newer systems?
Yeah, I'd say primarily speed. So, we're talking about. We've kind of framed this a little bit in terms of like big organizations versus little organizations. I don't
No,
really
it's
think
not
that's
there,
it.
is it? Yeah,
It's
yeah.
about fast organizations and slow organizations. And there is a quote, I think it's attributed to various, one of those quotes that's attributed to various people that, it's no longer the big beating the small, it's the fast beating the slow. And I think that's the real key to it. So, I talked before about, the ability to be able to spin up an environment on demand to test a new feature that you've been developing. You just can't do that really on a mainframe or kind of that. It's not really legacy, but even kind of on-prem, right? I mean, yes, you've got some kind of VMs and that kind of stuff, but just the real flexibility of a kind of cloud native kind of stack, it just has that huge advantage of allowing you to quickly and also cheaply experiment and try things out and try, without this huge regret cost if it doesn't work out, and then be able to get that to your customers and see how it goes with your customers without having to commit this massive time and effort and money upfront.
Quickly and cheaply experiment. That's nicely put. Denise, one of my former colleagues, Jost Hopperman, used to say that systems modernization was a bit like trying to change the engines on an airplane while it was in flight. And it is a little bit daunting for people at established organizations, and to Andy's point, some of which are very small as well as some of which are quite big. How do you start? What can you tell us a little bit about how you at Enfuce work with some of your clients to start tackling some of this? Where do you start?
Good question. I think it's about working together. So no matter if you do it all in-house, you rely on your own teams, or you decide to partner up but you definitely need great collaboration around the table, from business process owners to operating the hard core environments, to those that are using on daily basis the system in back office. So we come in as a partner, not thinking that we know what's on the other side of the table, but navigating discussion, making sure that are we tackling the questions from all angles? Are we involving all the right people? Because it's not only the CTO office who needs to be involved, but it's not just the back office people who needs to describe their needs. You need to involve compliance, back office, customer service, and the CTO office. So you need to be prepared to take your time in navigating through whatever is at the table. So if you want to transform a whole bank infrastructure, you can't do it at once. You need to decide, okay, where do we have the most urgency to get started? How do we find the connections into this part? And how do we make sure that we don't do things today that we need to change already in a year from now or in 2 years from now? How do we make sure that when we go in and start the modernization, we don't end up in 2 years' time realizing that what we did 2 years ago was wrong design. So I think partnering up with someone like Enfuce, during our 10 years, we've seen 60 transformations go to production. Most big banks, they have some people that have been around in some transformation, but you don't have the big teams who have over and over again seen change happening and being part of planning and executing on the modernizations. So the value in bringing a partner is all the experience that can be brought to the table, not covering your own setup and your know-how, but I really think it's complementing each other and asking the right questions, diligent planning, and then the start of execution, because you can also be in endless planning mode and fear to take the actual step to start executing. So you also need to have someone there pushing you, okay, so now it's time to get started. And yes, you will probably make some wrong decisions. And yes, it probably will hurt and it won't be the most comfortable years of your career, but it will be impactful. And once you've over the hurdle, you can feel proud of yourself for executing it.
Do you think it's harder for big firms or small firms? Because Andy, you made the great point that it isn't just big banks. There's all sorts of, smaller credit unions, building societies, Sparkassen, etc., all across Europe, Latin America, etc., that are also sitting on old, outdated systems. Big firms, in theory, have lots of people, lots of money. Small firms often don't. Is it harder if you're in a small firm, or easier if you're in a small firm? What do we think?
I think you can argue both ways, and you can always find excuses why it's so hard for you and why the others might succeed, but the others will have the counter arguments for it. On the other side, a smaller firm, you can be more agile, you can have a much tighter team working really closely to each other. You don't have too many stakeholders. I mean, big firms, you can have hundreds of stakeholders. You can have layers of decision makings before you can move ahead. But then on the other side, you have the massive amount of people, you have maybe deeper pockets. So excuses you can find anywhere, but also the will to do real change.
Yeah, I completely agree on that. I was going to say kind of the same thing. People in Atom are kind of very used to me couching any kind of situation in terms of people, process, and technology, and then I kind of add culture in as well. I think in a big company, the people, kind of how to organize things and the structures and all that kind of thing that's quite a big, just there's a lot of people to organize. Process often is quite difficult to change in big companies because there's a lot of, it's embedded in a lot of big company just ways of doing things, and a lot of people are used to it as well. So it is a lot easier to do that in a smaller company. But then on the other hand, particularly around the technology, I think, that's something that I've found very different moving to Atom, a smaller company, than some of the really big companies I worked at, where, getting something, there are some things that you need to do, which are, you're going to write almost the same number of lines of code in a big company as a small company. And that means in a big company, getting that code written and that bit of technology done is a rounding error in a budget, whereas that's quite a big deal in a smaller company. So the technology bit often is, or at least the cost bit, I suppose, is more difficult in a smaller company, but the people and the process bit, and to a degree, I think the culture part is easier in a smaller company, just because there's kind of fewer people that you need to convince that you actually need to do something.
We need to pause here shortly, but Richard, it sounds to me as if some of this coming back to the point you made earlier about leadership, but a lot of this is just about leadership, and you sort of get the bank that your leaders deserve.
Probably fair. I mean, I personally always take the small over the large if you're trying to do things, just because your ability to take decisions, to make things happen, if you need new skill sets, sort of tweaking culture, that's much easier in a small firm than a large firm. But yeah, clearly in a large firm you do have more resources to do that with. But I always found the very large firms, sort of Byzantine bureaucracy to get any decision made, being pretty tedious. I think leadership is absolutely vital in this, right? And I think it's personally, I'd say, harder to get that cut through from leadership in a large firm than a small firm. I think the other point I just wanted to make that perhaps builds on what people were saying earlier. I think some people look at this as like a one-off project, and I think that's a completely wrong way to do it. And I think actually that's what leads you into deep legacy. So I mean, Allica's got pretty good tech, right? But we are continually devoting time to technical debt and to changing components or upgrading our own software where we believe that it's needed, right? So you don't fall into the trap of having some old system that isn't probably documented, is out of date, is out of support, whatever. So I think that's vital, that almost you're setting aside ongoing cultural acceptance that, look, we're going to invest 25, 30% of our resource every year in keeping updating. I mean, just for example, Allica, right? We're 6 years old. We're on our sort of second go around on a sort of full upgrade of the sort of data warehouse and data tooling capability. So I think there's kind of something there about just, if you think things are sort of once and done in technology, you're in for a sort of nasty surprise down the road.
Thank you. Let's take a quick pause here, and we will be back shortly after a quick break.
Friday on NBC, Jimmy Fallon and Bozoma St. John host the incredible new competition show.
I hired 10 creatives from all walks of life. They will be battling it out to see who can impress the world's biggest brands.
This is a huge opportunity.
This is the battle for the next big idea.
This is not play.
We're spending millions of dollars.
I'm so excited to embark on this adventure with all of you.
May the best idea win!
On Brand with Jimmy Fallon, Friday on NBC.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster, so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's vanta.com/insider.
Okay, well, in the second half of this podcast, let's explore how banks can navigate the shift from sort of legacy infrastructure to more modern systems in order to meet rising customer expectations for things like personalization and sustainability, and to stay relevant in a world of instant, embedded, and intelligent financial services. Denise, perhaps let's start with you, building on some of those points that Richard was just making about, how can firms sort of manage that fear of risk and disruption from migrating away from systems, or that fear that you suddenly realize, oh my goodness, we're dependent on this really old system that we don't know how to support any longer, and so on. How do you help sort of firms manage that kind of transition away from some of the older systems?
I think going with a partner is partly about de-risking your journey, your modernization. If you partner up with someone that truly can help you navigate what's ahead for you, but also enable new features so that it's not just keeping up with what competition already offers, but that you also can look through that. What would you like to innovate at the same time? So not just change one to something else exactly the same, but making sure that you also meet customer demands while you do it. And if you choose a partner that already have systems operating, you can start off with, say, a new product launch. So you can softly introduce new ways of working, new systems to your own back office, to your own customer support with something small. Because it can be scary if you immediately start thinking that, okay, over this weekend, 4 million of our customers will be migrated to something new, and it's new for everyone. We haven't seen it live in production. We don't know how it actually will operate. So it's then navigating and finding a path forward that feels safe for everyone involved, while also testing your own internal capabilities to modernize, to change ways of working, optimizing business processes. But it's also about navigating compliance, risk and compliance, because it's not an easy navigation for anyone today to keep up with latest legislation and making sure all data is protected according to all rules and regulations around you. And especially if you work in an environment across many geographies, so let's say EU and UK, a lot is similar, but there are also differences. And do you know how to optimize that in your modernization? So it's not just only looking at the tech side. It is about looking at the end users, and it is about ensuring that you stay compliant as well. But I'm not saying that going with a partner is the right choice for everyone. I really think that you need to make constant choices. So what is the core capabilities internally at our bank? Where are we really good? Where do we think that we maybe have weaknesses, and where we might need to partner up? So it's not one size fits everyone. Again, it's about being honest around the table, and then stick to your beliefs of what your core business is, and then outsource the parts that maybe won't fit in to your core capabilities.
Love that. Richard, that might be a really good question for you as a chief executive. How and when do you decide to sort of bring in partners? I mean, for something like systems modernization or whatever, or other things more widely? When do you decide, yeah, we need help, this is more than my team can manage right now? And when do you decide, no, we've got this, the team can handle it, we don't need extra help or outside help?
Yeah, so I think it's, I agree with what Denise said, right? You've got to pick your choice. So for us, so as we came to Allica from Revolut in 2020, and yeah, I guess had a quite deep rooted conviction that for Allica, we should be doing our own software, data, platform engineering work in-house, not via partners. So we have built up that capability over the last few years. We've now got 225 people in those areas. But that's quite a thing to do, right? And quite a commitment, because you're investing quite a lot of money in expensive people that are in demand. You need to have the right sort of ways of working, culture, to attract them and retain them and to make them productive. And yeah, I guess that's a choice, right? And probably the choice a lot of neobanks make, but it's probably not the choice that most banks make in the industry. And it is quite hard to pull off unless you have the leadership that sort of is going to very much value the engineers in the culture. So I think, there isn't a right or wrong here. What we would say is that we certainly use components, right? I think, not from anyone in the whole industry who just builds all their own stuff from scratch. I mean, so our own view then is, I guess, if we can find a component that's on a SaaS basis with good APIs to integrate, we'll very happily work with someone else's component with our kind of engineering integrating it. We'll build our own if we think the thing doesn't exist to the sort of, I guess, specification that the standards we're after. So that's kind of the principles of how we think about, I guess, partnering more widely.
Do you think along similar lines, Andy, or do you have a different perspective?
Yeah, pretty much. I think there's probably a couple of ways of axes to think about that. The question is often phrased kind of buy versus build. Sometimes obviously you're getting a partner to help you build, but we'll phrase it as buy versus build. I think you can either think of it as build the things which are commercially differentiating and competitive advantage, and buy the things that don't really give you that, where someone else has worked pretty hard and thought quite a lot about ledgers, for example. We don't write our own ledger. We have a core banking system that from a vendor that we use for that. And I think sort of along the same lines, I also think about it in terms of how far up and down the stack it's appropriate for your organization to buy versus build, because no one builds all the way down, right? That if you take that to absurdity, you'd be, mining your own silicon to make your own chips and generating your own electricity, which I really don't think is the core business of a bank. So we use GCP to provide compute services because I don't want to deal with that, and they do it a lot better than I could have my teams doing. So we try and think of the higher levels of the stack is where we concentrate our capability and concentrate our effort.
Denise, another question I'd love to explore is sort of how to manage change and sort of particularly sort of systems change within a complex organization. This point about sort of trying to change the engine while the airplane is in flight. How do you go about deciding, which systems, which processes to sort of start with, how to rebuild? I remember there's a railway station here in London that got rebuilt a few years ago, and instead of rebuilding it from top to bottom, they rebuilt it from left to right so that the trains could keep running. And they literally almost rebuilt it platform by platform, which seemed strange, but was actually a really intelligent way of doing it. So rather than shutting it, they gradually built it sort of line by line. Are there ways that banks can sort of manage to sort of migrate system by system or modernize system by system without having to do that sort of big bang heart transplant surgery that often doesn't end well?
Yeah, I don't think there is one right answer that will apply to anyone out there. Again, it's about knowing how it looks for you. How is everything connected? What's your baseline today? And what do you want to achieve after the modernization. Once you know what you are dealing with, then it's easier to start look at, okay, what's the right order? Do we go from left to right, or do we go from top to bottom, bottom up? Where do we get started? So even though you think that it's the issuer processor that you want to modernize, it's the card management system, it might be that you need to open up a little more broadly how the overall architecture looks like, so that you can see all the integrations and all the processes that are connected to that one piece that you think you want to modernize. Because when you open up a little more broadly, then you find the right path for your organization to do it. And so keeping transparent, being open around the table for those that are going to be involved, and then make the decision and stick through with it. I said it won't be easy. I don't think any modernization is pain-free or frictionless. But once you get started and you start to see a real improvement, your back office maybe can reduce their overtime, or processes that tend to run for almost 24 hours suddenly runs in 2 hours, then you start to really see the benefits of the hard work that you are doing.
Fantastic. Let's wrap up with maybe a slightly more controversial question, right? So digital banking and banks face this sort of constant change. There's all sorts of changes on the horizon, everything from sort of artificial intelligence all the way through to sort of tokenization and so on. So you're constantly having to keep finding new ways to innovate, to serve customers more cheaply, more efficiently. You're dealing with macroeconomic environments. There's a lot being thrown at the leadership of large banks and small banks. Do we think that established organizations, firms that have been in business since the 1970s or earlier, are going to catch up, are ever going to manage to catch up with the digital banks that started 5-10 years ago? Or is there just too much work to be done? Is it too hard to catch up? Richard, what do you think? Do you think any of the established firms can catch up? Have you seen established firms that have made fantastic progress? Or do you think it's just too hard?
I think you can get catch up in specific areas. I mentioned some retail banking mobile apps earlier, where those have improved a lot via sort of investment, very substantial investment, kind of following a lot of competition from the likes of Revolut. I think that if you take Revolut as an example, it has sort of powered ahead on a sort of pan-galactic basis across countries, products, segments. So, yeah, I guess they very much are an example of someone using both organization designed around a product structure and a tech structure, and then the speed of shipping that's enabled to, I think, remain very much faster than anyone can catch up. So, yeah, I think you'll find people will catch up on certain areas. I think the question is, can the digital banks keep innovating new things? And yeah, then if your pace of being able to do something is quicker than the traditional bank, you will keep winning. If you run out of things to innovate, then yeah, you'll get caught up. It's not like catching up any one individual thing is impossible. I think clearly we haven't really talked about. I'm glad about it, actually, because it's talked about too much. But kind of agentic AI, right, in this context, and the question of how much that enables easier catch up via some coding agents. For things like migrations from legacy and so on, or maybe the degree to which it actually removes some of the historic channels interfaces, like some of the UI innovations that digital banks have done, and changes the form factor of that. Don't know. There's kind of a whole big question right around how that kind of influences the landscape of the next 5 years. I think that's I probably lean into the view that will further help the neobanks, but it could, if used in the right way by incumbents, also help catch up.
I think you're spot on, Richard, that the bigger organizations can use their might effectively to catch up on things that already exist. but it's almost in a large organization's nature to abhor new things. Big organizations are set up to be standardized and for everything to be the same. So even if they catch up with something that exists at the moment, there will always be new things. And I think they are much more likely to come out of smaller organizations that are by their nature, they exist to do new things. And that's going to be the real key. And that's what will stop the bigger banks being at the front of everything. They can catch up, but never get in front.
I would also, if I had to leave a legacy bank, established bank with one thought, it is that transformation isn't about technology. It's about courage. And the biggest risk is not change in itself. It's standing still while the customers move on without you to someone who do serve them better. So start small, start safe, but start now. And partner when it makes sense, and focus on what customers truly value. And maybe you won't just survive the wave of disruption, you'll maybe even thrive in it. Future will tell.
Wonderful. So essentially, systems modernization isn't really about technology. It's about courage and leadership and being able to be where your customers want you to be. Wonderful. That is a wonderful way to wrap up today's conversation. Thank you all. This has been great. I've really enjoyed it. Where can people find out a little bit more about each of you and what you do? Andy, where can people find out a little bit more about you and about Atom Bank?
atombank.co.uk, and you can look me up on LinkedIn.
Denise, where can people find out more about you and about Enfuce?
Enfuce.com and LinkedIn.
And Richard, where can people find out more about you and Allica Bank?
Yeah, so I'm best off social media-wise on LinkedIn, and we are www.allica.bank.
And you can find me, Benjamin Ensor, on LinkedIn, and you can find out about us at 11fs.com. So thank you all so much for listening. If you've liked what you've heard, please do follow our podcast. Do share us with your friends, let them know about it. Look for us on social media, just search for 11fs or FinTech Insider, or email us at podcast@11fs.com. So thank you so much again to my three panelists, and thank you to all of you for listening, and goodbye.
In today's fast-changing digital world, proving your company is trustworthy isn't just important for growth, it's essential. And that's why Vanta is here. Vanta helps companies of all sizes get compliant fast and stay that way with industry-leading AI, automation, and continuous monitoring. So whether you're a startup tackling your first SOC 2 or ISO 27001 or an enterprise manager vendor risk, Vanta's trust management platform makes it quicker, easier, and more scalable. Vanta also helps you complete security questionnaires up to 5 times faster so you can win bigger deals sooner. The results? According to a recent IDC study, Vanta customers slash over $500,000 a year in costs and are 3 times more productive. Establishing trust isn't optional. Vanta makes it automatic. Visit vanta.com/insider to sign up for a free demo today. That's VANTA.com/insider.